is we've moved on to the next panel discussion, which is on compliance risk in a new paradigm. And of course, with COVID-19 and the rush to do things digitally, financial institutions are being exposed to ever greater risks of money laundering and fraud. So we're going to look now about what they can do about it. To help us with that endeavor, I'm joined by Adil Mirza, who's head of compliance at Delma Exchange, Aravind Narayan, Global Director, Sales Strategy and Execution at Refinitiv, V.Ramkumar, Senior Partner of Cedar Management Consulting, and Subhas Roy, Global Chair of the International RegTech Association. Thank you very much for joining me this afternoon, gentlemen.
Yeah.
Great. So perhaps you can all just take 30 seconds, try and keep it brief to tell us about yourselves and about your organizations. So Adil, why don't we start with you?
Yeah. So my name is Adil Mirza. I'm the head of compliance at Delma Exchange. I have been here around 2 years, and previously I worked with several banks and other audit firms, consulting firm in the region.
Okay. And Aravind?
Yeah, hi. Hello from sunny England. It's a real pleasure to be here. And hello, Elliot, and also hello to my fellow panelists. So I'm a global director for sales strategy and execution. By that I mean I look after the go-to-market strategies for customer and third-party risk solutions within Refinitiv, which is now part of LSEG, as you might have not known very recently. And I primarily look after KYC screening solutions and part of digital ID within our institution. Thank you.
And V.Ramkumar?
Hi, Elliot. You can call me Ram.
Okay.
I'm a senior partner with Cedar. Cedar is, we actually help, is a consulting firm, and we are a global management consulting firm helping banks around the world with designing and executing their business and IT strategy. But more specifically in today's context, I would say that we've been doing a lot of work in helping banks in designing their processes as well as the technology platforms in evaluating, selecting, and ensuring that they have the right kind of platforms. More importantly, Cedar is also the parent firm of IBS Intelligence, the UK-based global fintech research and publications firm that actually is serving clients around 100+ countries here.
Okay. And Subhas?
Good afternoon, good evening, good morning, depending on where you are speaking from. I'm Subhas Roy. And as Elliot introduced, I'm the global chair of the IATA, International RegTech Association. We are a not-for-profit organizations in about 30 countries, and it really represents, the growth part of the regulatory technology, finance, risk and compliance technology practices. We have about 600 technology firms who are our members. We also have individuals, such as Ram here, such as Adil. Pretty sure would be interested to know more about IATA. What more can I share about IATA? The purpose of IATA, I invite you to go and take a look at regtechassociation.org. But the purpose of IATA is three. So first of all, support the RegTech ecosystem, and that means working with companies such as Refinitiv. David Craig, who is CEO of Refinitiv and now runs data analytics within LSEG, good friend of mine. He's on the advisory board of IATA, for example. And one of the key purposes of IATA is really promote the ecosystem, the level playing fields, helping to lower the barriers of entry into banking and financial service sector of some of the budding companies, and around genre of solutions, definitely including financial crime and CFT. A little bit of background: I'm predominantly based in London. Well, for the last year and a bit, obviously in London. Previously I was a partner in EY, Ernst & Young, and I ran EY's EMEA financial services regulatory practice. Then last 5 years, I was a senior partner in Oliver Wyman, and I ran Oliver Wyman's EMEA risk and finance practice. And currently, I've started my own firm, ICAC Partners, and I have a few folks who provide risk and regulatory advisory at a niche strategy boutique level.
Okay, great. So now we've all gotten to know each other. Of course, we've seen, since the pandemic hit, we've seen huge amounts of digitization taking place. Consumers are doing more of their work, shopping and banking online. Banks have been doing more things online than they were before. It's had many positive aspects financially wise, in the sense of more people being financially included, for example. But it's also, of course, had the potential now to weaken security, to weaken know your customer guidelines, exposing banks to money laundering and fraud and things like that. Have we noticed that as things have become more digital, that fraud inevitably and KYC has been unable to kind of perhaps keep pace with what we've seen as kind of unprecedented speed of digitization? Aravind, perhaps you want to pick up this one to begin with?
Yeah, sure. So yeah, absolutely. I mean, I was speaking to a few folks in UK finance the other day, and it was appalling, the numbers, right? They basically said that fraud had gone up by 100% pre-pandemic. So we definitely see very high level of scams happening, especially COVID-related scams, and about 66% scams just in the UK alone, and about millions of pounds spent on the fraud. So yeah, I mean, I think the biggest fraud trend that we see was pretty much in the account takeover, purely because there's a lot of impersonations, digital synthetic ID type fraud, because mainly because companies are saying, yes, I want to go digital, but you don't really realize the level of digitization that you need to get to kind of catch fraud all the way through. Just by launching an app is not going digital. So what happens is that the banks are trying to kind of firefight the need of, again, customer engagement, because they shut down the branches. So they need to get customers to engage with them. They launch an app without sufficient controls, and that results in big loopholes. And once you have a loophole in a financial institution, a money mule or a perpetrator or a fraudster can enter the financial service, and that makes a big kind of gap. And I see that exponentially increasing in since 2020. So yeah.
Adil, is that your experience?
Yeah. So I would second Arvind. I mean, that many of the financial institutions were not ready for going digital. I mean, all of a sudden, COVID was on their head. Digital experience has already started, right? I mean, financial institutions were moving from branches to digital, banking, but the pace was very slow. COVID has just increased the pace, and now financial institutions have to mentally go digital. So of course, many of the financial institutions or companies were not ready. They face a lot of challenges. Fraud is one of them. How to manage it, technology, how to manage the resources, human resources, how to implement it. So all these created a, very big challenge for the institutions how to implement those, or go digital in true sense. Not only just buying a software, as Arvind said. So of course, it requires, coordinated effort from all the all the departments in any financial institution, starting from the board. Strategy should be, developed. Clear roles and responsibilities should be, devised and communicated. Of course, clear communication with the customer is also very important in this scenario. Customers are looking for more and better services, more digital services. Are you ready for it or no? Are you in the, in the development phase? So you have to keep on updating your customers and tell them, okay, yeah, we will be providing you services in a digital manner, better services.
Mm-hmm. And Ram, KYC didn't quite keep pace with the drive to digitize, perhaps?
Absolutely. No, I guess, think about it, right? If you look at the last 10 years, if you take the top 20 banks have paid more than $250 billion in fines, right? And you clearly are seeing that, you have this, any disruption is only a crude reminder that, you can never be too big to fail, right? It just brings in the context of how the need to actually keep yourself, build yourself in a way where, even as you move digitally, keeping along the lines of what any digital transformation talks about is, speed, agility, and accuracy, right? You are looking to drive all of these three, even from a compliance standpoint, and be it be it having your interoperable model that makes sure that you're able to build the connectors. And going back to the point on KYC, right? I mean, if I was to look at, the 3 or 4 pillars that you actually talk about when it comes to fraud management and RegTech. I mean, one is of course the area of customer authentication and KYC, but you also have the aligned areas of anti-fraud and real-time tracking and monitoring, and the whole AML screening process, leave alone the data sciences and analytics which are to do with reporting and regulatory compliance, right? So you see the whole, the spectrum to not just be limited just to one area, but I guess the name of the game is actually having the right, framework that you're able to harness and say with confidence that I'm actually in compliance. I think that's where the key is.
Subhas?
I think it's very interesting. This is a topic we are always talking about in the industry, isn't it? So I was sort of, a three-pronged approach, the way I normally define. So one is, if you talk about the BFSI, and some of the colleagues here talk about banking, I think, fair to say assets, wealth, and insurance are not prone from, fraud risk and sort of wider AML, CFP as well, right? So the size of the parse is getting bigger and bigger every year, available to the fraudsters. So if we think about the internal perspective, so that my sort of, first point of the strategy, banks and the FI sector really need to be considering that as a part of their widespread digitalization, because in a bank, for example, that Arvind had mentioned and sort of Adele you mentioned, as an organization, you are spending more money on digitalizing every year than the year before. That's the fact, right? So when we are digitizing and sort of, when you're creating your next 3-year strategy for digitalization, that itself gives us the opportunity to relook at end-to-end customer-based processes. One of the key reasons, which I concur with Adele, it's very difficult to catch up with the fraudsters, is the threat vectors are from very 360-degree angle. So you should not only try to protect your front end of the shop, you need to look at inside as well. If you are not able to train your employees, if you're not able to give them the right culture, right communications on a continuous basis, they might click on an email link and there you go, bingo. We have seen that happening elsewhere. We have seen it happening a number of times. Sure. So the message is very simple. An internal strategy, which is all about culture and mentality, is risk management is for your competitive advantage. Do you consider yourself digital transformation is important for your competitive advantage? 100 out of 100 respondent is going to say digital is the way to go. We have to invest. Why can we not think about that when you are going and spending and investing money on digital transformations, we're going to keep a pot of that for appropriate risk protection as well. It's about raising a child, isn't it? You're buying the most fancy toys. Are you also protecting the child when he or she is going on the street? So that internal mechanism is very important. And my message to all of you and to the listeners is, it's more than technology and processes. It's processes and technology, but plus the other people. We should not forget the people. And so a big task of the transformation officer is to really put this fraud risk mandate from a people aspect, which often we don't do as a community.
And of course, your organization is only as strong as your weakest link. So, I mean, given that, what are the key steps to managing risks in periods of disruption, such as the one that we've been experiencing, and in many places continue to experience? Ram?
Well, I guess I think the way, and I go back to what Subhas was mentioning, right? I mean, if you accept the fact that driving compliance is actually a competitive edge, I go back to how one would look at a typical Maslow hierarchy in a context of compliance, right? At the bottom of the pyramid, you could see this as a hygiene factor. And you could actually elevate this to say, look, this actually is more about saving fines and saving costs. But you could actually, if you move up the ladder, you could pretty much see this to actually be driving customer confidence. And in the process, you obviously are creating value for the enterprise in the marketplace, right? So one could see this to actually be perceived in different levels. And if I go back to your question again, I would think, the three advantages or three approaches that one would take to drive, this in this context would be to embed compliance as part of your process framework. So when I say framework, it includes the element of technology and people to it. So it has to be more of a culture than as a larger end that you're trying to achieve. It becomes embedded. And the second and very critical piece, which I guess becomes increasingly important in the digital context, is data, right? So this is not about just, managing and harnessing data, but also about making sure that you have a singular source of data and you are actually not having the disparate silos, right? So that becomes the second important element, or should I say the secret sauce to making sure that you are addressing this. And the third piece obviously is driving a culture. And I go back to again the point Subhas was making. It's actually about making sure that this is innately in the DNA of the organization and not something that you're pursuing as a tick in the box, right? I mean, that's what I would think.
Right. Deal?
Yeah, so I agree with Ram. I mean, of course, compliance should be part of day-to-day activity and part of the culture in the organization. Earlier, what used to happen, if a financial institution has developed a product, so compliance will be the last to know, okay, and then they will give the comments and maybe, product is approved or some challenges are there. So, so most important thing now is to involve compliance from the very first day, bring them on the table, not in the last, but at in the very start. Of course, compliance is there to help, not to stop the business. Of course, there's no business, then there's no compliance. What's the need of compliance? However, compliance helps to make sure that, okay, we do business in compliance and in as per the regulatory requirements. And second thing is, of course, to hire the right resources. In the compliance department as well, not just to fill the position. Okay, there's a vacant position available in the compliance function, so hire somebody. No, hire the right resources. Give the job to the right person who can do the job. And of course, you have to train. You have to spend some money, some funds on the training of the compliance staff as well, to keep them abreast of the new changes, what is happening in the industry, new technologies which are coming in. And of course, whatever the resources are available, let's say the compliance management system, utilize it to the maximum. There are several features maybe not utilized by compliance department. Maybe it is useful for the other departments as well. So you have to spend time and learn and utilize it to the full extent.
Mm-hmm. Aravind?
Yeah, again, agree with all my fellow panelists. It's very well said. And I think for me, definitely there are three things. Data, because the data is evolving, and unless you learn to embed that data as part of your compliance process, it's never going to be 100%. You will never get there. And obviously tied on to that is technology. And for me, that is, again, a key component, because I'm very much in a tech evangelist who kind of very big proponent of RegTech. So that is definitely there. And another one which Subhas mentioned was very important as well, which is, the people, right? So having the right mentality, get the org culture to kind of shift, to kind of say, hey, compliance is not going to be a cost center. We are trying to make it more of a revenue generator, because guess what? By deploying the right technology and the right data, we can, at the outset, when the customer is being onboarded, let's say, you kind of make it a frictionless journey for them. So guess what? Instead of bank A or financial institution A, you would go to B, because their journey is smoother. And considering, there was a study which said the frustration threshold of an online account opening process, I think this was just for the UK, was about 15 minutes or so. So, guess what? You're going to lose a customer, whether it's compliance or not, whatever process you put in. If you don't get them onboarded on time, you're going to lose them. So for me, those are kind of the three main pillars. And on top of that, there is obviously the bigger part of monitoring those customers, right? So understanding, because there's so much more to happen. So now there's crypto, there's CBDCs in the horizon. There's buy now, pay later. So there are different fintechs and different offerings out there that's all bringing a whole host of risks, right? So it's not just the pandemic, but it has opened up a whole host of a plethora of kind of platforms and ways to kind of do business. So kind of engaging with data technology and obviously customers at the center of all of this. That's the way to kind of manage risks. Thank you.
Yeah, I'm glad you mentioned technology, Aravind, because I'm keen to know from your perspective what new innovations in RegTech are coming along.
Oh, yeah. Yeah, no, absolutely. I mean, I think there are lots happening. I mean, in the space, and I'm sure Subhash can probably add more color to it. So for me, in the RegTech universe, it's pretty much RegTech. I mean, regulatory reporting. There is obviously the ID verification, the digital ID piece, transaction monitoring, and overall the risk management. So I think one of the main things I see a lot that our clients are using our technology and our data as well is RPA. So they kind of strongly believe the robotic process automation really feeds in the data and kind of gives out the right logic or the right kind of insights to the right teams. So we see a lot of Microsoft suites being used for such like Power Apps, Power BI, all of that stuff to kind of take our data, create insights out of this, and kind of use that a lot. Now, obviously, everyone will say AI, ML. I think I'm going to say that as well. I think it largely is very useful in the RegTech space because that kind of brings the data aspect of it. Because we are, believe it or not, we have, I don't know, 20,000 compliance staff in HSBC alone. So you can imagine the kind of work they do, the kind of sea of data they are handling. So for me, alert management, so things like false positive reduction and understanding the right kind of data point that you're after can only be achieved by a machine. And that's pretty much machine learning and AI right there, getting some insights out of this data, right? And another one which I want to touch on, which I don't know if it will ever materialize, but I believe a lot in collaboration and data sharing. That doesn't happen much in the AML financial crime world much because, there's a big block of data privacy that comes in the middle of all of this. So for me personally, I believe if privacy enhancing technologies, which will basically kind of take some country's data, pseudonymize it and send it to someone else and say, hey, watch out for this sort of criminal activity or fraud activity, this might happen in your country or your financial systems too. So for me, pets or privacy enhancing technologies are also pretty much up there in the list. Thank you.
Great. Adil?
Yeah, of course. I mean, if you want to, new technologies, evolving every other day. Let's say the client verification process. It used to be, manual, then the fingerprinting, then the eye scanning. Maybe soon we will see the voice recognition also will come in place. So every other day we see new solutions, new processes, or new technology to make sure that customer will have very smooth process of onboarding. And a study conducted by the EY, they said, 40% of the customers are willing to abandon the onboarding process if it is too lengthy. So elimination of the documentation part is the most important. Element. Right now, we can see. If you apply for a credit card or any product, so right now, banks are asking only for the scanned copies of the documents. However, still, there's some documentation involved, which we have to completely eliminate.
And Ram?
Well, I guess, talking about innovations in the RegTech space, right? There's a little bit of perspective that we may want to have here. 5 years back, just to put things in perspective, right? If one looks at the kind of investments that were made in technology related to regulatory compliance and things around it, more than 30% of the investments were actually on applications or on programs that costed less than $1 million. And today you actually have, and only about 9% was actually on areas that costed more than $25 million. And if you look at where things are today, you find, the less than $1 million investments are actually in single digits. I mean, less than 10% of the investments made by banks are in that category. And more than 20% of the investments that are made in RegTech are actually costing more than $25 million every single program. What does it symbolify? What simply means here is there is obviously a need for banks to look at their compliance needs and the technology that supports it to be seen on a holistic basis. So one is not dealing with it on piecemeal, on case by case, and treating them as individual cases. And the number of cases that are to be dealt with are far too many, right? I mean, just to put things in perspective, there are 120,000 pages of regulation. That is what needs to be complied by the global banks. Just look at the enormity of the task at hand. So it just gives you the order of magnitude that needs to be dealt with. So I guess going back to the point Arvind was highlighting, there are 4 broad categories in which you see innovations happening. The piece that we always have known from the past has been around, monitoring and screening, which is more anti-money laundering and so on and so forth, which has always been in play. But what you see innovation being invested significantly is in real-time, near real-time tracking, which actually is helping with anti-fraud, both external and internal, the way Subhas was referring to. The second piece, obviously, significant amount of innovation happening around knowing your customer, where you have ID-based identification in places like India where there's Aadhaar, or in the UAE where we have the Emirates ID. So there is a lot of technology built around the intelligence that is coming along with it. And the third piece, which really is the icing on the cake for every single bank that is investing in analytics, is about harnessing the data to really make predictive analytics about forecasting, about determining where things could actually potentially go wrong. And as Arvind highlighted, minimizing your false positives and ensuring that you actually have the best experience for your customer. That's right. What I would think. Yeah.
Thank you. And Subhas.
I mean, all the speakers have talked about how busy the sector have been, right? And I would just invite the listeners to look at IATO website. We define the RegTech sector across 6 key taxonomies, as you call it. So financial crime, risk management, FCRM is one of them. Cybersecurity, data protection is another. I think we haven't talked about consumer protection, investor protection, misconduct, all of that. Again, really, really important. I think reporting, monitoring, oversight has already been talked about, by a few of us. Wider perspective, compliance management, the end-to-end risk and controls processes. I'm not going to take a name, but a big, this is one of the top 3 American bank. They had received a consent order from the Federal Reserve late of 2020. So you might know which one I'm talking about. But I'm just not going to take a name because of the lack of internal control. So, we are talking about some very advanced technology, for example, what Arvind was talking about, right? Alerts and all of that. But it is also important to understand that big organizations, big banks, right, often struggle to meet the basic needs when it comes to day-to-day risk management. So my suggestions and my recommendations would be just to focus on your resilience. So what I always say to my people that I know and my clients is, how do you create a balance between efficiency and resilience? So let me explain what I mean by that.
You've got just one more minute, just so you know. If you can do that in 1 minute, please.
Okay, I'll do that. So resilience is you're protecting your organizations against compliance, risk management, all of that. Efficiency is to deliver faster, better, cheaper customer service and make money. You have to understand that your digital transformation program and your RegTech transformation program need to play a role together, because both of them are pulling the organizations in 2 different angles. So how do you bring it together? The other recommendation that I will have for the buyers community, for the banks and the FIs, is that rather than really treating companies, RegTech companies, as a product provider, treat them as a solution provider. So companies like Refinitiv, rather than bringing them in for a 6 months, 9 months for a project such as WorldCheck, think about a 5 to 10 years business partnership, because companies such as these are actually trying to resolve a problem in the industry. So let us look at it from that perspective. And I think Ram, you talked about dynamic risk monitoring, KYC platform. All of that should be then looked at holistically as an industry, and we should work together to find the solutions. I think Bahrain stage is set for a fantastic platform, something like this.
Okay, let's all work together. Nice way to end on. So thank you very much, Subhas Roy, V.Ramkumar, Adil Mirza, and Aravind Narayan. Thanks so much for that fascinating discussion. Very important, of course, because if you don't get the compliance right, then everything else that we talk about at this event and others can perhaps become moot, because you won't be able to carry on with your fintech or financial institution. So thank you so much for that fascinating discussion.